Good morning, and welcome everyone to today's trade in the European Open here at the Live Trade Room. Now, today is Monday, the 17th of September. I hope you had a good weekend. So what we look to do during this session is to look to identify some high probability trading opportunities. Now, we have a bit of a method that enables us to do that. So how do we cherry pick which trades to focus on and which trades that we need to look to stay away from? Obviously, a very difficult decision-making process for traders. We'll hopefully iron out a bit of a way forward for that. Then, once we've selected our trade plan, we've identified those opportunities we look to execute those trades with as much consistency and discipline as possible. In terms of identifying those entry levels and of course being able to manage and control risk as well while we're trading these markets. And then we start to enter the trade management phase. So what we look to do primarily is to cut our losers short and let our winners run. And for us to actually be able to facilitate that, we need to make some decisions with regards to trade management. So you'll see all of this unfold over the course of the session with one aim, and that is to book in consistent returns. So without further ado, if I could draw your attention firstly to our risk warning. Of course, please do take a moment to familiarize yourselves with the risks involved in trading these financial markets. Okay, so before we get into the charts, let's do a quick review of potential market moving news. So for this, we shall get up Forex Factory. And straight away, we can draw attention to the fact that it's a bank holiday in the UK. But when we look through the rest of the trading news for the day, there's a couple of medium impact news events. There's a CPI figure coming out for the Eurozone. And in the afternoon, we have some medium events impacting the Canadian dollar and the US dollar at 1:30 p.m. and that's UK time. So outside of those events, not an awful lot of news. Again, apart from the more macro events, which are obviously ongoing. So that's just a little snapshot and a little understanding of the news flow. So 10 a.m. As far as the session is concerned, 10 a.m. we do have final CPI figures for the Eurozone. Okay, and it's a year-on-year figure, so it is, and you can see where this 2% estimated figure comes in, and that's obviously consumer price index, so it's an indication of inflation, and we're looking up at these higher levels. And that's one of the mandates for the ECB, is to keep a close eye on inflation. And we can see it's pushing to the upside. So we're aiming for that 2% mark. So let's see at 10 a.m. if we get that figure at the 2% or not. So what we'll do is, it's Monday morning. It can be quite useful to just see price action on a much bigger time frame. This is a part of our approach. We use a multi-time frame analysis to identify those opportunities in real time. So what we can do is we can just briefly this morning just take a picture of a weekly time frame, just so you can see where you're at with some of these trades. The reasons it can become a little bit difficult to determine directional bias in terms of whether we're looking to buy it or whether we're looking to sell it, and sometimes taking a look at a weekly time frame can really assist you in that process. So as we look at this chart, you can see this market moving sideways. Even last week's candlestick, which was looking very, very bullish, effectively sold off 50%. So the reasons why we don't want to necessarily agree with those that suggest that the US dollar or the move in the US dollar is pretty much over. The reason for that is this market clearly topped out for quite some time, and then we got a really strong explosive move down to this level, and we got the next leg lower. So what we've done is we've pulled back in this market. We've attempted to make a new low and failed. So we've kind of got this range bound situation just sitting in here, but also to the upside and to the downside. So really at the point where this market breaks above this area in here, so we're talking about the 1750 to 17 to the 1.1750 to the 1.1800. There's kind of a 50 pip range in here. If we get a concerted break above that level, at that point we could then go along with those that suggest that the move in the dollar is finished. The problem is we're not quite seeing that, and we've attempted to do it on a couple of occasions and failed. So really it's still on to the downside, and that's the level that we're looking for to the downside. And as you can see, we're currently literally smack bang in the middle of that kind of range. So when we talk about the dollar and the euro for that matter, we're in a range bound market. So an easier way to see this would be looking at it on a daily time frame, and you can see that we've been in this sideways moving market since mid-May. So that's a prolonged period for certainly a market like the euro dollar, which is the most liquid market in the world, and we're getting this sideways moving pattern. So that just gives you hopefully a little bit of context behind the dollar. Even Friday's candlestick was actually significantly bearish after Thursday's. We had some central bankers last week where there was a bit of positive news sentiment coming into the market, and Friday completely reversed all that positive sentiment. So we're still in kind of choppy trading conditions, and what it suggests to us is that perhaps the strength in the dollar is not finished. So there's still lots of signs in the US. The economy is performing relatively well. Unemployment is at significant lows, and a lot of the economic indicators are all looking like they're performing to a certain degree. They still have their structural issues, of course, but things are looking quite good, certainly when you compare the US to many other jurisdictions. So a little bit of indecision. In fact, the potential for this market to break below Friday's low, or even Thursday's low for that matter, would be quite interesting for us. I'll just switch this color. So that's an intraday daily level where we can look at sort of this market moving below the 1600 level. We're not too far away from there. We're kind of 30 pips away from there as things stand. So we could get that little thrust lower. And really, if this market continues higher, it's really above the 1733 level, and just ever so marginally above that would things get interesting for us to the upside. But at this current price, it doesn't necessarily stack up as a high probability trade. So looking at the pound dollar, we can see a strong structural failure here at these levels, and this market really making a significant move to the downside below the 26.75 level. And all we've seen for the last 5-6 weeks is a significant pullback off the lows, and that's the way things still. That's what we're seeing still. So we're just getting, okay, we had a little bit of an indecision candlestick in here, but really we're getting a bit of a pullback, and this is why the weekly high, last week's weekly high, is an interesting level. If we break above it, we are just continuing the pullback, but it has the potential to provide a little bit of resistance. So let's see if we get the next move to the downside. This market will need to make an attempt to make new lows at some point, and when it does, it will give us really useful information on this market. Plus, obviously, the Brexit negotiations will weigh heavily on the British pound. The softer the Brexit deal becomes, the likely the likelihood is we're going to see the pound strengthen, and the potential for a no deal would weaken the pound quite considerably, and maybe this is the pullback to a weaker pound, which is quite possible. So on a daily time frame, we've got a couple of structural failures to the upside, but we do and we are currently breaking out this descending level, and we are considerably above that level as things stand. So it's a case that there's a little bit more when we look at this, there's a little bit, we need to see a little bit more price action before we can make some high probability trading decisions off the back of the pound dollar. So at the moment we're just moving to the upside. Even looking at, there's a significant difference between a euro dollar and a break below the 1607, and compare that with a break below Friday's low, it would just be a pullback potentially to the upside on a daily time frame. So again, it wouldn't represent fantastic opportunity for us. Looking at the dollar yen, we're in this sort of sideways, slightly this market with a slight downward sort of trend to it, and this is on a weekly time frame. So we can see that this market is kind of ranging between these highs and lows, and it'll be interesting to see if we're able to get a structural break below the 109.92. This would represent a really strong move lower. We have a number of these levels in here, so I'm just going to take a couple of these away. Okay, so we've got rid of those intraday levels, and as we look at this market, a close above this level in here, the 112.37 approximately, would actually constitute a structural failure back to the upside and a breakout of this little range that we have here in the dollar yen. So again, we're just needing to see a little bit more to get into some of these. We had a really nice breakout on Thursday. Not much follow through on Friday, but obviously a little bit more. We saw a lot of pullbacks in a lot of other markets, and we actually held these particular highs. So let's see now if we get a bit of a pullback today. We just kind of want to exercise a little bit of caution if we can. We've had a nice flush to the downside in the dollar Swiss. We're still hanging around these lows, so that for us constitutes the potential for this market to continue lower. The 96.34 is the significant level in this market, and even a close below the 96.52 might give us a slightly earlier entry in the dollar Swiss. Moving on to the dollar CAD. When we look at this market, we can see that there's a bit of a support in price, pushing prices higher, as you can see. Now Friday's candlestick was very, very bearish, so we had a complete rejection of Thursday's move higher. We're lurking around these kind of lows in here, and there could be a biasness to the upside or to the downside. We are running into these levels of resistance. And we can take note of the outright low here, the 28.86. But if this market closes below 29.97, 29.79 should I say, then we're likely to see this market continue lower. But we do have this ascending line, and we can use that as a potential form of support for the dollar if we start seeing some dollar strength come into this market. So bit of a difficult one. Thursday's price action was quite clear cut. We'd expect continuation. We didn't get it. We got actually a really, really bearish candlestick. We're now lurking around these lows. So a tough market to get a handle on. And what we want to do with some of these markets is we want to identify high probability trading opportunities where we can look to get into them and see if the market can take us to a certain level. And if we don't get that opportunity like we would like to, then it can of course create a little bit of concern for us. So we've largely been in a sideways range now, going back to mid-July. We've had a tiny little break lower for 2 or 3 days, and then we've had a complete reversal. So there's the potential for a bit of strength coming in to this market. So we can look at Friday's high, the 30.56, and that may present an interesting opportunity for us. We're still we're sort of 20 pips away from being able to see that little breakout to the upside. And what we'd be doing is potentially looking to get into some dollar strength and see if prices can push back up to these 3,200 levels. Aussie dollar. Again, price action from last week is inconclusive, I'm afraid. So we've had, previously to that, we've had 2 significant bearish weeks. We've failed to sort of close lower, and we've attempted last week to really make a strong move back to the upside, and you can see most of that failed on Friday as well. So bias is to the downside. Can we capitalize on a move lower? That would be the suggestion, is to get into this market below the 71.49 level, and we're currently just above that level as things stand. So this is a market worth looking at, see if we get some continuation lower, but we'd need to see confirmation in other areas as well to see if we can capitalize on that move, an extended move to the downside. New Zealand dollar, you can see there's this downward pressure, so we're looking for opportunities to sell this market if we possibly can, and we're very likely to see another extension lower. The only concern for us would be whether we get a little bit of an impulse to the upside first or not. So currently hanging around these lows as we look at this chart. Now again, if this market rolled over on Friday with quite a bearish move, to be fair, a little bit of indecision on Thursday, bearing in mind a lot of the dollar weakness that had creeped into these markets, and we're looking like we're getting this market creeping lower. The only problem is we do have to be looking to sell this market below the 65.39, and we're a little bit above that as things currently stand. So Monday morning, not overly surprised to see not an awful lot of price action over the course of the Asian session. So let's see if these markets start to open up. And just to clarify, we would be interested in getting involved in the Aussie dollar and the New Zealand dollar below these levels. We'll probably primarily focus on the Aussie dollar, so we'll come back to that. We'll keep a close eye as well on the euro dollar. Could definitely be worth focusing on. We even had a strong spike lower which sold off quite considerably just over the last 15-20 minutes or so. New Zealand dollar, we will keep an eye on this market as the morning unfolds. So the euro pound was quite strong. The pound was quite strong last week against the euro, as you can see. Now we've not yet broken beneath those levels, but we have our weekly lows at the 88.76 level, and if this market rolls over to the downside, then we're likely to get at least a continuation to the downside move. So it's not necessarily the highest of probabilities, but it would be worth looking at to the downside, but only a break below last week's low, as you can see. And we'll go into the daily time frame. We've comprehensively reversed most of last week's indecision with quite a considerable amount of volatility, and now we want to see if we get continuation to the downside or not. If we do, would represent a tradable opportunity to the downside. Euro yen, last week's price action actually really quite strong. Friday's price action, when you get these really strong long range days, you can often experience a little bit, you either get explosive moves to the upside or you get retracements, and clearly we've seen some strong retracements in the euro yen and the pound yen. Well, not so much on the pound yen, but a little bit of a retracement off the highs. So really we're looking for this market to continue higher. We are in this kind of downward trend. So at what stage would things change for us? Actually, if you're looking at Friday's high, which is the 131.11, that is the level for us that would represent high probability trading opportunities to the upside. So we want to keep a close eye on that. Obviously, we're a little bit below that level as things stand. We're probably 90 pips below that level. So no need to get into this market prior to the 131.11. So just give this market a little bit of room and scope and space to move, and we'll see what opportunities may exist. Now to the downside, there is this downward sort of move. We're just in this kind of descending triangle, really, when you think about it. So we've got the potential for resistance around this area, and then we've got the 124.98 level. So quite a long range from highs to lows, but really this could be an opportunity for this market to roll over to the downside. The high probability trade will be below the 12800 level. We're obviously a little bit away from that. Might be an opportunity to get into it earlier, but just generally just a little bit of a choppy picture. We will certainly reserve a little bit of judgment. Same situation for the pound yen. If some strength starts coming into the pound, we start breaking above the weekly high of the 14700 level, then we will look to get into this again, but maybe not just yet, really, is where we're at. The gold, you can see the bearish price action that's come before it, so we've capitalized on a lot of these moves already. We've gone into a 6-week sideways moving pattern after a big flush lower followed by a retracement. So the weekly low is quite significant for us. The 1187 to the downside is a significant level for us. We're just currently sticking fairly close to the 111.95. As you can see, Thursday's and Friday's candlestick was quite what we've seen is a little bit of a rejection in these markets now. There's your double tops. So pull back off the lows, extension lower, and now the weekly low of the 1187 is an interesting level for us to see if we can squeeze this market to the downside. So that's the gold market. Okay, so US oil. Again, we've got slightly a mixed picture in this. So without doubt, I hope you would agree, this market is in a bull trend. Now, what's happened over the last few weeks has created a bit of indecision. So we have the weekly highs and the weekly lows that can become actually quite important levels for us in this market, because we've had a bounce back off the lows. We've attempted to make a new low and failed at the $67 level. So now we're in this middle phase. So if we break above the weekly high, we'd be continuing to the upside with a strong understanding and degree of confidence in that move. However, the same for the weekly level to the downside. We'd certainly get a move from the $67 to the $64.50 move if we got a break below the weekly level. And as you can see with a number of these markets, we're kind of firmly between the two. So Obviously that makes it difficult from a trading perspective. You'd have to say you'd expect this market to continue higher from this level, but like I said, the identification of it being a high probability trading opportunity is not so accurate. On a daily time frame, what we want to see is that, like I said, the $67 level broke to the downside and the 71.66 broken to the upside, and that would constitute structural failures even higher and lower. So that's the US oil. UK oil, similar situation. We were suggesting last week that there might be opportunities to sell this market, and in actual fact that's the case. And we can see on Friday's candlestick on here, Thursdays and Fridays, we've had a strong rejection of the weekly highs, the 79.82, and this market has really bounced off quite considerably. Still just a pullback to the upside, a little bit of support coming in around the 77.20 level, and now today we've opened this market and it's pushed higher. So if anything, this market has the potential to actually squeeze higher, but we are facing sort of difficult market conditions, and we're still firmly in between the weekly high and the weekly low. But on a much bigger picture, we'd like to get into this market above the 79.92 level. And we're a little bit off that, so we're going to continue to monitor this market, and a couple of these markets are in a position where they could give us opportunities at any time. So the S&P, looking at it on a daily time frame, we can see the extension to the upside. We've had a nice strong pullback, and we failed to make a new high. Now that's quite significant, because this has the potential to create a double top, which is quite a bearish piece of price action, with a really strong move to the downside. So this is potentially trade number one from these kinds of levels down to maybe the 28.64, but the big high probability trade would be trade number two below this 28.64 level. So we kind of need to just see how this market unfolds, I'm afraid. What we can do is take note of the daily low and just see if we get a break below the 28.96 level. If that's the case and we get some weakness creeping in elsewhere, we might come back and have a look at this. So we'll take note of that level as things stand. We're not too far away from it, and you can see this market has been sort of range bound really. Even the last half an hour, we've bounced off this level on 2 occasions. So let me put that level in there. Okay, so this is the S&P 500, and we'll continue to look at this market. So I'll come back to that shortly. Dow Jones, we do want to we could trade it along the same sort of lines. Effectively, this is a double top from this level. What we've done is we've failed to break to close above these levels. So I'll just make note of this level in here. So the double top still exists, and this could be a good opportunity to sell it from this level and see if we get a bit of a squeeze lower. Now we keep a close eye on the S&P, but we very well may come back to the Dow Jones. The Nasdaq, again, it's in a slightly different position, and again, from a price action perspective, this is one of these difficult ones where if this market continues lower, then the breakout trade is below the 73.88 level, this level in here. That's your structural failure to the downside. The problem is with this market as things currently stand is we're currently in the midst of a pullback trade. So really the opportunity for this market to squeeze higher is still quite valid, which means a break above this level here is our high probability trade to the upside. It could be argued around this area as well would be sort of opportunity number one. So we're inching higher as things stand. Probably better to focus on the S&P or the Dow Jones just because of the structural setup. The UK 100 market just moving sideways, as you can see, for a week and a half. Very likely to react positively and negatively to the British pound. So we will keep a close eye on that British pound. And just finally, really looking at the Euro stock trade, really strong pullback off the 32.73 level to the upside, and we're just running into these previous lows, and let's see what we get off the back of this move off this low, the 32.73 level. A break above the 33.55 unfortunately still constitutes a pullback, so we're kind of in a little bit of an indecisive phase as things currently stand. So we've identified three significant trades. We'll have a look at the gold market as well. I think that's worth looking at. But certainly for the session. So we'll start with the S&P. So we'll have a look at this top right. So this is our trade plan for the session, and I'll come back to each of these one at a time. The gold market, we can place this bottom right. So we'll keep an eye on this from a price action perspective. We've got the S&P top right, the gold market bottom right, and we've also got two dollar markets. So right, so we can stick the euro dollar top left, and we'll put the Aussie dollar bottom left. Okay, so these are our potential trades then for the trading session, using multi-time frame analysis to identify these as opportunities. A lot of last week's kind of indecision and perhaps the week before maybe looking like it's kind of rolling over again to this week. So we kind of have to have a strong understanding of the market conditions, and they are particularly choppy, and that's obviously not great news for traders, because any particular move, you're not getting the follow through that you would ordinarily expect. You're getting some really choppy market conditions and strong reversals off very significant levels. And that pattern has been in play now certainly since the beginning of September, and it's the market conditions. So understanding that makes sure that you will perhaps have a slightly different approach to your risk management strategy. For example, these are not the markets to be super aggressive in. And now we do get trading conditions where we can be super aggressive. Those do come around as well. Certainly on an intraday time frame basis, we can get into trades on multiple occasions, really add and build a kind of a position in the market. But these are not the markets for that type of approach. So we need to err on the side of caution. We want to protect capital wherever we possibly can, and if we get into trades, keep your risk under control. Know exactly what you're contributing to that trade and to that market, and and trade the conditions. So that's what we'll be looking to do. So really we want to see the S&P 500, if we're in keeping with the daily time frame, is a little bit of a break below these lows as things currently stand. It's a simple sort of double top effectively, and a little bit of a move lower. So when we take this into the 15-minute time frame, we can see this level of resistance, but I want to see if I've got my low. You can see it's not quite at the exact level, so the low is the 28.97 level. So I'll just bring this up a bit. So it's 28.97 is our exact low in this market. So when we go into the 15-minute time frame, you can see it just coincides with this low here. So so the first thing that we want to see is a close below the 28.98, and then we want to see this market continue lower and break through the 28.97. So you can put this back up on the screen. So if we get that move lower, or even, not that we'd be looking to buy this market, because we'd be looking for, we know which direction we want to take this market, and that's to the downside. So it's this level here that we're looking at to the downside, but without doubt the potential trade exists to the upside as well, just not with such a high degree of confidence in a move in that direction. Gold market, we kind of want this market to kind of push lower from these levels. What I'm going to do is just take note of the low for this market. So if this market rolls below the 11.93, it could give us a good opportunity to push lower. Looking at the euro dollar, choppy conditions to say the least. Strong moves to the upside followed by really strong moves back to the downside, and this has been going on for a little while now. And this is why having a plan is really useful, because you can predetermine what you would like to do if you get the opportunity. And for us, it's this rollover trade to the downside. So that 16.07 level is quite an important level for us. It's probably just a little bit higher than this. So a close below the 16.11 represents a really good opportunity. Because for the Asian session, as you can see, and the latter part as well of the US session, we're kind of in this sideways moving pattern. And as you can see from this market, what you get is sideways moving markets followed by explosive moves, followed by sideways moving markets, followed by explosive moves, followed by sideways moving markets, even like a smaller move here. And then we just get a complete sort of reversal of this market, and you can get obviously really strong reversals. But the point that we're making is we're now at a phase of sideways moving markets. So we've obviously got two options. Will this market make a return back to the upside, or will we get effectively the trade to the downside, which is what we would prefer to see happen, is this market continue this short-term move and continue lower. So there's arguments for this market to move in both directions, to be fair. We're just making a judgment call based on price action to suggest that there is significant potential for this market to just roll over to the downside with a little bit of descending sort of pressure on it, and a break beneath this low in here would give us that opportunity to see these prices push down to 15.26, and it would just represent a really good trading opportunity when it will arise. So we can continue to look at these levels. The significant level is just a few pips below this level, so for the sake of 7 pips, we might as well wait for the higher probability trade, which is just down at these levels, the 16.11. Okay, so that's the euro dollar. And unfortunately, it's a case of waiting for those opportunities to come to us and not to preempt the move. That wouldn't necessarily make any sense for us to do that. As tempting as it will be, and I suppose this is where aggression and frequency come in. A lot of new and inexperienced traders feel that trading is actually about taking trades all the time, when what we would like to pass on to you is that it's not always conducive to take trades all the time. Markets go through tight periods like now, choppy markets, and they also go through really free, open and expansive moves that are relatively straightforward to continue to get into when you get those opportunities. So we've just got to obviously trade the market conditions, and they can obviously change at any time. So just looking at the Aussie dollar, we do like this market to potentially squeeze lower. We've got some intraday decisions to make, and what I mean by that is we've clearly got this little channel being created on a 15-minute time frame. So as things currently stand, we're kind of pushing prices at this level. So for us, we need to determine at what point would things change, and that's a break beneath this double bottom. So we're seeing this market bounce off the lows, attempting to break a new high, and as you can see, potentially failing. So if this is a failure to the upside and we get this little roll over to the downside, then we would likely to see this little move really break down and below the 71.42 level. So we can very much be right now, we don't need to be too aggressive with this market, and it looks like we're extending and breaking and continuing higher. So unless we get a strong rejection of these highs, we're likely to be pushing higher for a little bit longer. Maybe first instincts would be maybe up to around this level in here, 71 level, something like that, bit of a pullback to this level. And then at that point we might get a little breakout to the downside. So we've just got a number of these markets that we can really continue to focus on. So what we shall do for the session then is just identify the levels that we're looking at. So the 16.18 to the downside in the euro dollar. We're looking for at least that first point of contact really as things currently stand. Is this market to break below the 71.50 level. We're currently at the 71.63. So we're only 13 pips away from this structural failure to the downside. If we fail to make these new highs, we might get an opportunity to sell this market. The S&P 500, we want continuation actually back to the downside, so we're not really interested in the upside trade, and the 1191 level to the downside as well in the gold market. So what we have currently up on screen is we've identified probably the most high probability trading opportunities for the session. As you can see, it's probably the best of the opportunities that are currently out there. And what we clearly need to be is patient, I'm afraid. We almost want to do our analysis and wait for the market to come to us, and not go chasing these markets from a psychological perspective. Don't necessarily get in at every possible selling opportunity. Really cherry pick the opportunities and identify the levels in advance, and then I think from a trade execution perspective, trading becomes a lot easier because the markets are moving in a way in which you're comfortable trading these markets. So it's a good way, it's a good approach to adopt. And if you think about confidence in your trading approach, if you identify these levels and price breaks to these levels, you've done your analysis, you've created your trade plan. I suppose a phrase that we always use is plan your trades and then trade your plan. So if this market, if the euro dollar breaks down to the 16.18 level, we know we're looking to sell that level. So we've done all the analysis. We're just literally waiting for the opportunity to arise. And occasionally you do all the analysis and the market just strengthens, which is absolutely fine. The market is it's entitled to do whatever it wants to do. The only thing we can do as individual traders is decide under what circumstances do we want to enter and exit these markets. And that is really stacking the odds in your favor as a trader. So that's what effectively that means. Do you have a methodology that you can utilize that is relatively consistent and disciplined in its nature, but also patient as well, something that prevents you from jumping in during choppy markets and taking a series of back-to-back losses. Losses during these markets are per se they're almost inevitable. What's important is controlling the monetary exposure in those trades during these market conditions. That's what's important, and if you can do that, you do give yourselves a fantastic opportunity to make consistent returns when you trade these markets. So these are our levels. Guys, please do feel free to utilize the chat box if you do have any questions about anything I've said or any aspect of trading these markets. Feel free to use so I've just posted a little comment up there, so do feel free to make a comment if you wish. Perhaps you have markets that you do like the look of. If so, do let us know which market that happens to be. We can obviously have a look at it as well. We wouldn't overly be surprised on a Monday morning. We can see that the euro dollar is just sort of making its move to the upside. So the dollar strength is weakening a little bit for the session. No major surprise on that. Okay, so we're seeing a bit of dollar weakness creep into this market. Then a little bit of strength, not overly surprising. Just bouncing off these lows, so we may be in for a little bit of retracement on. A little bit of strength creeping into this market at these prices. There is an argument to suggest buying off this low. If I show you in a 15-minute time frame. So from a price action perspective, it's pretty accurate, isn't it? Like, big supportive price point. Okay. So we're still going to continue to look at these markets. In fact, well, when we switch across now to the live trade room, we'll look for some of these opportunities in a bit more detail. We might be in for a day of dollar weakness, I'm afraid, and it does feel like that's going to be the case. Okay, so let's get the gold market up. Okay, so these are the markets that we'll continue to look at. So unfortunately, guys, we need to switch across to the live trade room now. We have our traders over there. So from a news perspective, not an awful lot to focus on. We do have CPI information on at 10 a.m. So we'll have a look at that. And this is all UK time. So the markets we're looking at, and we're looking at closely, even potentially for some European strength or some dollar weakness, could be the euro dollar, also the Aussie dollar potentially to the upside. The S&P, we do like the idea of this market selling off to the 28.98, so we might get some opportunities there, and the same situation as well for the gold market to the downside. Okay, so on that note then, we'd like to switch across to our traders over there at the live trade room. So please do feel free to just have a look at the information below. If you would like to join us, we're currently running a 2-week free trial, so you can access our live trade rooms completely free of charge for 2 weeks with no commitment to continue in any way, shape or form. And the other thing as well, if you decide to join us, you can access those live trade rooms for just $9.99 per calendar month. So hopefully you'll find it a valuable experience. Please do subscribe to our channel. Do click the bell function as well, so if you do have any, you'll be notified once we go live. And thank you very much for joining us, guys. And we'll be switching across to the live trading room now in just under 60 seconds. So from everyone here at the live trading room, take care and we'll speak soon. Bye for now.